So it's definitely a cool little opportunity right now with the rates coming down, and the sellers might not be kind of like caught up yet, you know?
Let's move on to maybe you just giving us a real quick state of the market. What is happening right now in the mortgage industry? To give a little preface of my own here, it looks like to me that rates, like you said, like peaked at this. I was seeing rates at already in the eights. Not all over the place, but it was in the sevens and eights. And obviously, when we're used to like three, four, and nothing above five for the last decade or so, that's been
Crazy jump.
insane, right?
In 9 years, I've never quoted like eights. And then 2, 3 weeks ago, I started doing it. I had to take a step back. I was like, whoa, this is kind of new for my career, and I've been doing it like, more than a handful of years. So it was definitely a little bit shocking at first, but it created opportunity because when rates go from 6.5 to 8 and over like a month span, it pulls a lot of people out of the market. It creates fear. It creates like same thing happened last year. We had a similar transaction with one of your team members, and also last summer, August. We have the stats, like I could pull it up, but I've done this like so many times. But last summer, the rates peaked. It was the first time we crossed 7%. And then after that, the windfall of that, like October, November, is when people got the best deals. Someone from your team member, we had a deal where we also did similar 3-to-1 buy down, where the credit was like 40K. And now this year, it went like a different step higher because we first time saw 8%. And it also happened in August. So it's kind of like interesting how history is repeating itself, where end of the year, rates spike. There was some really bad readings in terms of labor reports, inflation, and then just all this kind of trickled into it and rates spiked. And then now here we are, middle of November. We just closed the deal where we got like the biggest seller credits. And this property was selling 3, 4 months ago for 1.2, 1.3. So it's kind of like crazy. So it's definitely like a wave of opportunity that comes when we see these high rates. But history does repeat itself. It kind of like phases out, and it's already starting to see it. Like this week, we had the inflation report that came out, and the numbers were, this is the first time in months where it actually went down. So inflation went down. And yesterday, the wholesale report went out, which is like a statistic that measures like how much wholesalers are paying for material and supplies. So that number went down. Should be this Friday or next Friday is going to be the labor report that's going to come out. If that report is going to show a little bit of an uptick in unemployment, which I mean most people are kind of predicting it may, then this whole race coming down is going to be like even more push for it. I don't know. It's kind of hard, but from experience, I could say that these moments come and go. I don't know if you could say the same thing. You see more like do you have parts of the year where people make more offers or less offers? Like I think it kind of relates to.
It's not really, I mean, generally speaking, the spring is the hottest time, and then fall, like September, October, is the second hottest time. But, for a situation like this, like when we were in the seeing rates in the sevens and 8%, and then these last couple of weeks where they dropped down to now I'm seeing below seven for certain situations, this is where I am now, seeing more and more people excited to make offers. And also, I'm calling people to say, hey, I know you were out of the market because rates are going up and prices are still high.
Mhm.
Hey, now I'm seeing prices coming down, homes sitting on the market, and rates have come down. So this might be your time to, snap it up. And people, that's exciting. And so I was able to ratify 2 deals last week because of that. So
Yeah, no, it's definitely good. But it's like people have to make that move, because if you're waiting for the ideal time, you might be waiting forever, and it's not going to be able to lock in at the price. Yeah, no, that's awesome. I'm also seeing like a little uptick in like people applications and just in general when rates go down. Sometimes the sellers are a little bit slow to react because technically, if you think about it, if you're a seller and you have a house on the market and the rates went down like 0.5%, it's probably in your best interest just to kind of stall it out and see what happens. See what happens in the next couple of weeks. Do more open houses. But as a buyer, like that's your time to like, hey, let's make an offer. Maybe Mr. Seller doesn't know that the market changed yet. Let's just get in. I'm gonna lock in a lower rate, and then it's a win-win. So it's definitely a cool little opportunity right now with the rates coming down, and the sellers might not be kind of like caught up yet, you know?
Here's a question for you. We know where we're at right now. We know the opportunities that are out there. We talked about those things. What are your predictions? What do you see happening first quarter, second quarter, 2024?
In terms of like interest rate or in terms of like volume?
Interest rate, the market, and the mortgages specifically as it relates to your business, as it relates to opportunities and different mortgage products. Anything specific you see in your industry?
I don't think we're gonna match the peak that we saw in August. Like I think that's behind us. I mean, the target for inflation is 2%. I mean, we're hovering around 3% now. And the only thing that's economical that's kind of holding back is the labor market. And it's starting to kind of soften up. Like, I mean, you and I had the kind of unfortunate deal, but like, I mean, let's just kind of talk about it because it's happening like more and more where somebody got laid off like in the middle of a transaction, you know? So it's happening. It's happening a little bit more. It's the first time it happened to me, but it's happening more and more, and I'm seeing it in the news. So like as this happens, the labor market will soften up a little bit, and the inflation should push even more down. So just from experience and from what I'm seeing it in the field where it's already happening. So if we fast forward to Q1 of next year, where it's a new year, there's new goals. There's banks have new goals. They want to like fill. They want to start the year strong. And overall, if the inflation continues to go down and labor market softens up, then yeah, I mean the road to back in the sixes, like for 30-year fix is there. Most economists are saying it's going to take a little bit longer. They're targeting like summer, maybe like Q3 to get in the 6.5 range on average, of course. I mean, there's always like scenarios where right now, if you take if you take like a little bit more risk on yourself, where you do a short-term loan, you could be below the average rate. So that's kind of I don't think it's going to get worse because all the economic factors are already kind of like behind us. It seems like everything is happening to slow us down, and the prices are also in Bay Area is like one of the hottest markets for the last couple of years. So here it's already noticeable, like a 5-10% haircut off the previous high. It's already here. The only thing is, like for those of us in California, Bay Area, like Los Angeles, that program that was really hot last year. I had 2 clients that got in using the Dream program. That's also coming out in Q1. So just kind of imagine like all the things that are happening, like economically, the headwind is kind of slowing down. So the government is going to be more in like a firm position to where like, all right, guys, we achieved what we did with the rate hikes. Now we're just going to sit back, relax. And then once we see that we need to stimulate the economy, we might even start dropping the rates. So as soon as that happens, it's like, man, it's going to be like a totally different game. And then if we add the Dream for All program into the mix, Bay Area, I had one guy that got 200,000 in San Jose, and I had another guy that got 140,000 in San Mateo. So that was like a big stimulation because without this, these guys couldn't buy. So like once this program comes back, it's going to add even more buyers on top of a small little rate reduction. So I mean, if we tie it all together to like prices and just overall like transaction volume and activity, I don't see a road where it gets like slower. You know what I mean? It looks like the opposite, where it might get even busier.
Really appreciate you taking the time to go over all this. We'll have your contact info in the description wherever people are watching this video. You are a mortgage broker. So a lot of people, they may go to the big banks. They may go to Citibank, Chase, Wells Fargo. I usually do recommend that people talk to somebody like you because you're able to give different, more creative, like these 3-2-1 buy downs, stated income loans, just a lot of different things that people, for different people's situation, might be the best choice that they can't get from one of these other traditional banks. Again, Steve, thanks so much. Really appreciate you taking the time to make this video with me.
Thanks, Joe. All right. Thanks, guys.
Bye.